Good morning, Paul Georgie from Allendale. It's October 24th, Wednesday morning, and grain markets are higher, and commodity markets in general are higher with a risk-on type attitude this morning by traders. A lot of that prompted by the Chinese PMI number. It was better than expected, however, still below the 50 level, which is the swing level for a growing economy versus a slowing economy, and it still suggests that China's slowing, but maybe at a lower rate. The German PMI, however, was a big negative to the market here, below target, and very disappointing as described by many traders. We've got Mario Draghi from the ECB going to Germany, talking to the legislature there today. That will continue to get headlines as that meeting progresses. We've also got earnings here in the U.S. that continue. The major part of the earnings numbers by corporations in the U.S. have been below target, so we may see a setback there as we move forward today. We've also got the FMOC meeting out this afternoon at 1 o'clock. We'll get the minutes of that meeting, and don't expect much change, but that's on the horizon also here today. Specifically to grain, we've seen Asian markets stronger overnight. That's carrying over here in the U.S. The tight supplies of U.S. corn and soybeans continue to support markets here. Basis is very volatile. We see 5-10 cent swings in basis at various locations throughout the Midwest. Processors and ethanol producers continue to be aggressive. There's being talk now that some of the ethanol producers are considering going to Argentina or Brazil to bring corn in to process for ethanol. And this is a way, right now the biggest struggle and the tug of war is the farmer has got the harvest pretty much complete, got the grain in the bins, and he doesn't really want to move this grain until after the first of the year. So it's a real challenge for end users to drag that cash corn out of those grain bins. Weather, it looks like Argentina could be getting a little drier. The forecast is next week we could see some drier conditions in Argentina and southern Brazil, with a little more moisture in northern Brazil, where the dry area is being slowing down growth at this point in time. So things look to getting a little better, but the focus mainly in the grain market is going to be on the tight supplies of grain that we've got here in the U.S. right now. Keeps the market from falling apart, and I think any rallies also is going to be met with resistance simply because of demand. We've got USDA export sales numbers coming out tomorrow morning. We've got ethanol production numbers coming out here at 9:30 this morning, and then we've got option expiration on Friday. So we've got some reason for some adjusting in positions ahead of the weekend. It seems like after we get through with the economic news in the macro sense here early in the morning, then spreaders come in and start moving markets around. We see bull spreading taking place with the nearby gains on the deferred, simply because of the extremely tight supplies of grain that we have. In the livestock trade, the product was better for beef yesterday, up 17 cents in choice, up 181 in select. Cash cattle expected to trade steady to higher this week. The pork complex on the other side is running into some resistance. We've got product down 123 yesterday. Cash hogs are running into some trouble here at these price levels, and futures also. We've had a setback for a few days. We're very near trend line support in these nearby contracts. If we break through that, we could be open for a several dollar correction on the downside. We are in a time period where seasonals suggest that we trend lower for a few weeks here in the pork complex. So stay in touch with Allendale's advisory to monitor that. Give us a call if you got any questions at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.